and welcome to our show today. We're going to be talking about your money, but more important, your legacy. No matter how much money you have, you may want to leave a legacy here. So I have a very informative gentleman here with me who's been on the show before, but he has much more information to give us about families, money, and a legacy. So I'd like to introduce you to him. It's Rick Harig. Rick, thank you for joining us.
My pleasure.
You wear two hats. Let's introduce what you do.
Gladly. So I am a legacy strategist. I created this wealth advisor category, and we generate legacy plans that include what financial planners do but go beyond. And then I also am the chair of an organization in Chicago called Tiger 21. And so individuals who want to come together and discuss key issues about wealth in a community setting join our group and attend monthly meetings. And together we try to solve big issues and help each one make progress.
Well, they're very interesting people, very accomplished people, and they all have a lot of credit given to you. Because when I've been there, they've complimented you much. So I want to talk about those. Some people might say, well, I don't have a lot of money. And it depends on who you are, what a lot of money is. I noticed on one of the things, the comments, it says, do I need $75,000? And I said, is that forever or for a year or what? It depends on who you're talking to. Some people might think that's for their lifetime. Other people might think it's for a month. So what's the difference?
So it came from a government study that suggested that all one really needs to be happy is $75,000 a year. Now, for some people, that's still a great deal of money. Mm-hmm. I would submit that there's so much that can be enjoyed in life, or even far less than that, that there's reason to hold our heads high. The idea, though, is to have the opportunity to think about our lives with what we have and to make the most of them, of course, right? And much of this is out of our control, though. Taxes are out of our control, but we choose to live where we live. And so we have to be wise in our spending, wise in our investing, and hopefully have an orientation and attitude to help those in our community, be a good neighbor. That makes for a richer life.
And the biggest accomplishment is to get your freedom at a certain age, because some people aren't well enough to work, some people just don't want to work, some people haven't taken the time to enjoy life.
That's for sure. That's for sure. So starting early matters.
Yeah, I saw that one time in, where they had all different kinds of things about if you invested a penny a day for, if you started really young, you could accumulate $1 million. That's
right.
And it's hard to believe that that's true, but it is.
Well, that's one of the wonders of the world. It's compound interest. So hopefully those watching will have already taken that to heart or can begin today if they haven't.
So who's the person who comes to you?
So I am typically serving someone who has assets. Sometimes they have significant or even substantial assets. I'm helping them define the destination or the purpose for their wealth, what they'd like their wealth to mean, and what they'd like to change in the world often. So once we understand what the destination is or the purpose for what they have, we then go back and look at what needs to happen now in order for these outcomes to be realized. So specifically, it's typically somebody who has an estate tax problem, and they're looking for us to think with them about maximizing the meaning and the impact of their wealth.
And that's over how much?
So today, that's a large number. So the government allows us to provide for heirs with no taxes at $11,140,000 per person. And so beyond that, there is an additional layer of tax to be paid, in addition to the income taxes and capital gain taxes we paid all during our lives. So I work with those who have significant dollars.
So how do they find you?
Several ways. One is I help charities with their major donors to think about these larger issues and where they would like to make an impact. So charities bring me in and I give talks. I give a talk called the Legacy Conversation. And this is with individuals who I help examine what I call the arc of their lives, the shaping forces that have made us the people we are, and what the wounds of life, we all seem to suffer some wounds in our lives, how we can redeem those, and often it causes us to develop a passion for a particular cause. And so charities that have a larger vision than they have finances to fund it are looking for ways to inspire their donors. So I'll meet donors in that way. I'll also meet donors because of my work with Tiger 21. I reach out to people in Chicagoland and the Midwest. I have members who fly into my group every month. And so I have a number of outlets for meeting people, hearing their stories, and seeing if there isn't some way that I might be able to help them make progress in those purposes and things that are very
So
important
what's
to
your
them.
legacy going to be?
So I want my legacy to be certainly my children, right? As parents, I think we all want to grow great citizens. We want to grow a hunger for doing right by others in our children. I want to know that they have been able to live their lives in their skill set, in their gifting, so that they can really accomplish things where they've been trained, where they've been given the opportunity to work in the marketplace or even start their own businesses if they choose to. And so that's where my legacy starts. I want to know that what I've done in the lives of my clients has opened up new vistas for them. Our clients have given away substantial dollars, and that's because I help them control pre-tax net worth, which becomes a financial planning exercise. And if you can control your entire balance sheet, there may be you may have more than you need, you may have more than you want. So that opens up the interesting question, what might you like to do with the balance? And so this often leads to a journey that they enjoy and I get to facilitate.
So you're different than a financial planner, though.
I am. So I am credentialed as a financial planner. I'm a certified financial planner. So I do produce financial plans. And what I do beyond financial planning is legacy planning. I've lived in Europe 3 times in my adult life. When I came back the 3rd time, I decided to create a new category of wealth advisor. And so I became the first, and I trademarked it, the legacy strategist in the United States. And so what I'm helping an individual do or a couple do is think about how to maximize the meaning and impact of their wealth. So beyond the numbers, what are all the ways that we can get more out of our days?
Okay, the most meaningful gift I ever made had nothing to do with money. The kids should know what this is like. What does that mean?
So this is one of many quotes I provided you. And so this client in particular, I asked, has this ever happened? Or said differently, asked differently, what's the most important gift you've ever made? And I said, please, it need not have anything to do with the magnitude of the dollars. And so he talked about a gift he made to a homeless person and how during the winter he had found somebody who might well have frozen that evening. And there was nobody to come alongside this individual. And he was moved in his heart to step up and to reach out. And he brought him into a shelter, and this cost him nothing. But it gave him so much. And I said, well, what was the teachable moment in that for you? And he said, Well, actually, that I need to be aware of who's in my environment and what I might be able to do to ease their pain, maybe suffering, and help them see what they can't see on their own.
So I hope he then funded the shelter.
He did more than that.
I figure that's going to be the end of that story.
Yeah.
Well, you know, because as a nurse, I got to, you know, experience the rewards of seeing quick things happen and things change in people's lives, especially in the emergency room. But not every job has that ability to do.
Right.
So I can see where that would be very meaningful to somebody who had a different type of job that isn't normally helping people, or
Yeah.
a different type of business.
Well, that's right. And one of the things I've brought into my practice is I help an individual measure the magnitude of their surplus income, and their surplus assets. Now, most of us don't think about what we have and measure our surplus. So when it comes to making gifts, when it comes to identifying areas where we'd like to have an impact with more than our time, namely our dollars, it might be helpful to know exactly how much excess we have. That's typically not something that financial planners measure. Some may. We always do. Because I really want everyone to see the capacity that they have available to change what bothers them or what disturbs them most. And this is very satisfying.
And, you know, you have to be careful, too, which charities you donate to. And how do you find out about which are the ones that are the best charities to donate to?
Sure.
Do you research that?
We do. So there is a designation from the Internal Revenue Service called an IRS determination letter. And every bona fide charity must have such a letter. And when they do, then they are a 501c3 is the tax code section that speaks to this. And those charities that are bona fide with this determination letter can receive funds and provide you a receipt that can be a tax-deductible donation for income tax purposes.
When it is tax deductible like that, is the whole amount tax deductible? Or is
It's-
it a percentage?
Well, it's tax-deductible up to a certain percentage of your adjusted gross income, right? So the government will allow you to deduct more for cash than they will for in-kind contributions. The most tax-efficient gift is a gift of a very low basis. So if you bought a stock for $10 and it's now worth $100, you get to deduct the $100 when you donate it, and you don't pay any capital gain taxes, and the charity benefits by receiving the full amount without any tax impact whatsoever. So that is a smart way to give that we encourage everyone
Well, that's
to.
another thing. How does that work about, you know, giving things, like I know somebody whose father, very wealthy, donated his house to the city or county or whatever. So how does that work if you do it before you're dead? I mean, what does that do with your taxes or whatever?
It works very advantageously.
Yeah?
So I'll help you with this.
Okay.
All right? So what the tax code suggests and provides for, better put, is that a contribution to a 501c3, a bona fide charity, is deductible according to the tax rules, and the basis for that deduction is the fair market value of the asset. So if you or your friend donates his house to charity, that house will be valued. The same is true of a car. If you donate a car to charity, many charities ask for used car donations.
Or boats, I've seen.
Yes, it could be any asset, it could be a plane.
Mm.
And the valuation is key. There might be 2 or 3 valuations done on a particular asset, and then that becomes the basis for the deduction. To the extent that you have an adjusted gross income that's large enough to utilize that deduction, you may do it in 1 year, or you can carry it forward
So you can amortize it over several years?
That's right.
But you still get to live in the house while you gave it away? Or does this have to be after death?
So if you desire to stay in the house, we call that a life estate arrangement. And the value of the deduction is based on a number of factors, right? So you can have a life estate arrangement which suggests that you will reside in your home until your death. And this could be for a joint life, for you and your spouse. And then the house belongs to charity. And then there's a calculation that's done based on the mortality tables, and then that deduction feeds into your tax return.
Immediately? Not until after you die, it's immediate.
Yep.
You know, they have something in Will County, which they may have in other Will counties, where after you've lived in a house a certain amount of time and reached a certain age, the state will pay 80% of your land taxes for you if you apply for it. I don't know if there's a financial thing that you have to apply for, but someone said to me they were afraid to do it because they thought, you know, the state might come along and take the house at some point or something. Did you ever have a client do anything like that?
I have not. And I'm not informed about that, so I can't speak to that.
Well, it'd be interesting
Yeah.
to hear what you say after you get informed. I'd like to hear what you say. I have another question.
Please.
I have another friend who wants to move in with her kids. In
Okay.
order to do that, they have to purchase something larger for her and for them. So if she sells her house and she decides to move in with them and gives them the money from the sale of her house in order to do that, does that mean she's gifted them all that money and gets taxed?
So gifting is a function of the tax relation, and any tax related to the gifting is a function of the lifetime applicable exclusion, it's called. And as I referenced earlier, this woman could give up to $11,140,000 to her children. Am I to understand the house is worth more than that?
Well, I don't know what she's going to sell her house for.
Right.
But what they want to do is get a mansion type thing so that there can be a mother-in-law area.
That's fine.
So, but if she sells her house and gives them the money for that, is that different than handing a gift to somebody?
In practical terms, no. Right? It's not cash, and for gift tax purposes, you would probably want to file a gift tax return, and that return would indicate, well, she's getting cash that she's giving them, so the amount of cash is going to be
So if she
known.
gives them $200,000,
There's no tax due on that.
there's no tax due.
No.
But I thought you're only allowed to give them $15,000 a year.
Right. So
per person.
after the annual exclusion amount, which you just referenced, the additional sums are subtracted then from the lifetime gift exemption, which is the $11,140,000. This is not a taxable event at the time you give it. It becomes relevant if your estate is larger than $11,140,000, and so you want to be sure to have filed a gift tax return at the time that the gift is made.
But there wouldn't be a lot of taxes on that money then.
There'd be
right?
zero taxes, provided she hadn't made many gifts prior to that time.
And if you're over 55 and you sell your house, you don't pay taxes on it. Is that still true? I know at one time that was true. Your
Right,
primary
so
residence.
I'm not a tax accountant. I believe that's still true, but that's not something that I would be addressing. I let the tax accountants do the tax returns.
Okay, good. So now we're going to get back to this, now that you've explained those two situations to me. Let's see. I didn't sign up for this. Am I supposed to give away how much each year? And what do you mean do it well? Well, what do they mean they're supposed to give a certain amount each year?
So there's a story behind every one of those
Expectation?
quotes,
Okay.
right? So the story in this case was I was assisting a client who was from a multi-generational wealthy family. So there were trusts set up, and she had the challenge of managing the family assets, and the problem connected with that is that it was taking an extraordinary amount of time. And so her obligation, if you will, as a trustee to manage and steward these assets properly was interfering with the life she wanted to lead. So she was facing then also having to give significant amounts of capital away to charity. And to do that well also takes time. And yet there was nobody else to step into these shoes, so she had to do this work. And it was requiring so much of her. So I was asked to come alongside to help with efficient and effective ways to give this money away. And this is not so rare a situation. Particularly once I help somebody understand what the magnitude of their surplus is. I have several clients who just never really comprehended how much extra they had. And once they realized it, they wanted to give it away. They wanted to see good done in the world and to experience the joy of making a difference.
Making a difference, that's the thing. I want to talk a little bit about this book that we've been showing here, because you had me at a book signing of this very good speaker, Think Bigger, and 39 Other Winning Strategies from Successful Entrepreneurs. Something good for somebody who's going to go into business to read first.
Absolutely.
Okay, we have probably about 5 or 8 minutes left.
Okay.
So I'm going to leave it up to you what you want to talk about. We haven't mentioned yet this Tiger 21, so you might want to say a few things about that and then go back to the legacy.
Okay, great.
I'm going to hold this up so they see what Tiger 21 is here.
All right,
Okay.
so I came back from Europe in '94. I started my business, Legacy Resources, in '94. And about 11 years later, actually it was 8 years later, I was working for a family in New York City. I was helping them with their legacy, with their estate plan, and with the inheritance for their 4 children. And at the close of the engagement, they said, "Rick, this has been wonderful. We have to refer you to our friends. We want them to know that you're out there and you can help them the way you've helped us." And I thought that was very kind. And so it turned out he was a founding member of an organization called Tiger 21. And Tiger 21 is a organization that has forums in many cities in the US and Canada, now in England and in Switzerland. And essentially what happens in these forums is individuals who've built many times larger businesses and have sold them, they now have capital without all the obligations of employees and manufacturing facilities and whatever. And they need to be thoughtful, mindful about how they're going to invest this money, how they're going to preserve it, maybe for charities now, soon, and later, their children, and future generations. So what we do in Tiger 21 is we come together to help all of our members have better portfolios, better estate plans, better philanthropy, and better lives. And we do this by, well, if I keep it very simple, we all want to make wiser choices with our money, time, and energy. And I've created an experience for all these members that we do this in looking at 4 categories. One that's practical, so better portfolios, estate plans, and philanthropy. One that's educational, so I look for top speakers to bring into our members to help us learn more about things we'd like to know more about. And then there are things relational. And when I say relational, we all could bring more wisdom to the engagements that we have with family members, with employees, with advisors, and so on. And many times the rules don't cover all that we might need to consider in order to make wise choices in these regards. So that's the relational side. There's no way to be really be at our best on our own. We need a community in order to do that. And then lastly, social. We want to have experiences that help our members bond and grow and laugh and love. And so we do life together in these 4 ways.
Okay, so now, for each reason, how can people contact you?
I can be reached at my website. Our Tiger 21 website is tiger21.com. And my email address is rick.harig at tiger21chair.com. I'm a chair in the Tiger 21 world. Or my practice website is Legacy Resources. That's legacy-resources.com. And I'd be happy to discuss these matters further.
Okay, 3 minutes left. What's the most important thing you want to say?
Each of us, regardless of what we've been through or the assets we have, can live a rich life. We have the opportunity to do life together with others and to be generous and what I like to call generative. In other words, helping those think of things that they haven't thought of on their own and they just might be stuck. Each of us gets stuck at times.
Well, I think it's interesting how you can give your house away and get a deduction and still live in it.
Yes, that's interesting. Do you know you can give corporate stock away to entities that will give you a deduction this year that won't sell it until you're ready. So if you could get a deduction for an asset that you might be giving away at your death anyway, why not take that deduction now rather than wait until you're gone?
You can only do that with corporate stock or other things too.
C Corp stock is
C Corp stock
is the way it works best, yes.
Very interesting. Well, I'd like to thank Rick for giving us information on things that we really didn't know about before. And you can contact him, as he said, at Legacy Resources. And that is Harig, Harig, at legacy-resources.com. Or you can go to www.legacy-resources.com. Also, he manages, created, whatever helped create with this Tiger 21, which is a very interesting group of people. They're all very accomplished and have been very successful financially and business-wise. I mean, it's not only financial, they've done a lot of good things too. It's interesting to me because some of the people are very young and inherited a lot of money too. And I met one man, not at your group, but at another, a pastor who had never had any money, and his aunt died and left him an insurance company. He had a ton of money. So everybody was trying to help him deal with that money. Very interesting. But thank you so much for coming, Rick. We always enjoy getting our answers from you. And thank you for joining us, and we'll see you next time.